I want you to think about how 99% of retail traders have no concern for trying to make themselves prepared for the ebb and flow of profitability, losing, profitability, losing in the beginning. They just want it to be a lottery win and it's off to the races for the rest of their life. They just keep making more money. The way the market capitalizes on that weak mindset is because they're ill equipped. The first thing that the market does every single day is it hides the narrative. What is a narrative? What the market's actually going to do for the day that makes the daily candle. That's the real candlestick range theory. Not that bullshit you see fucking handed around on Twitter right now. Nonsense. The narrative on how that daily range is going to form. It starts with, are we going to have an up close or a down close on the day? You're not trying to predict the closing price. You're just looking at the monthly, the weekly, and the daily to determine what is the probabilities for the market to go lower and close lower or go higher and close higher. What would be things that would help with that? Well, if the monthly and weekly chart are reaching for an old high and they're in close proximity to it relative to that time frame, it still might be hundreds or 1,000 handles away still. But you can see clearly that it's drawing to that higher time frame area of either inefficiency or an old high or an old low, something to that effect. And then in the daily chart, you start seeing each individual daily candlestick still moving in that direction, even though they may have one or two days that are opposing that. If we're bullish, you might see one or two down days in the week. But majority of the days of the week, majority of each individual daily candle is usually an up day. That means it's confirming that it's gravitating towards that weekly or monthly draw. And by hiding the narrative, I mean that they're going to cause some kind of initial excitement. That's the Judas swing in the morning. Okay, and what they'll do is they'll use the 8:30 news time, even if there is no economic calendar release. 8:30 still creating some kind of a Judas swing. Now think about that. We would expect, oh, the news is going to push the market around. That's what they'll say. The news pushes price up and down. No, it doesn't. The buyers and the sellers at the time of the news, when nobody could even get trades in, but yet it's buying and selling pressure. You see how fast this shit falls apart? But because they say it to you so many times, and it's in every book, and everybody just regurgitates it and says the same thing over and over again, Hitler proved it. You tell a lie big enough and loud enough and long enough, eventually everybody will believe it. But when I'm standing here and telling you this is what it really is doing, and then what I'm telling you it's going to do, it does it. And not that I'm trying to prove that you need to be right or that I'm trying to prove that I'm right. I'm just saying the logic is right. That's the point here. Okay, so it cuts through all the bullshit that retail stuff leans on and has a religion around. No matter what school of thought you have, the market. Okay, if we can personify the market like some people like to believe it is, it's the buying and selling pressure. Okay. Okay. Well, how is it that the market collectively decides that it's going to run against the traders that use harmonic patterns that day, and maybe not Wyckoff traders, or the supply and demand guys that have been using the demand zones, if that's what they're going to use to get into their trades? Why is it that they get targeted that day and not the Elliott wave traders? Because they're never all in agreement. And when you take a step back and you think about all this stuff like that, it's like there must be something else going on. Because is it like, okay, this week we're going to let Elliott wave traders do well because you got to keep the book sales and course sales and the mentors that teach that bullshit. We got to keep them making money. And then we had to let Dow theory and Gann and Hurst cycles do well in the coming weeks too. And then we got to come back to point and figure because there's a lot of old heads still trading with that colors. So how can you kill them all and not have to do very much and make it simple? Run old highs, trade the inefficiencies. It's simple. You kill everybody. The algorithm doesn't need to know Wyckoff theory. The algorithm doesn't need to know what harmonic patterns are in play right now, what Gartley patterns there, what bat patterns there. I know all about all that shit, the butterflies, all that stuff. Okay. The only butterflies I see in trading is my students when they're doing it right. They get butterflies. Okay. There's no fucking butterflies in patterns in the charts. That's nonsense. It's garbage. Okay. It again is another religion. It's a fairy tale. The truth is the market only goes up to tap into pending buy side liquidity, or it goes up to rebalance and or redeliver to an inefficiency. That's all it goes up for. That's the only reasons why it goes up. The market goes down to trade into sell side liquidity, below and low or relative equal lows, because there's pending orders down there. Or it goes down to a inefficiency. That means like a fair value gap below market price to reprice to or rebalance that inefficiency. That's the only reason why the markets go down. I'm telling you to just go into the market with that mindset and forget everything else. And suddenly the charts will start talking to you. It'll be clear what it's doing, where it's reaching for, where it's not going to go.